Ever wondered how the Reserve Bank of India, or the RBI, makes its monetary policy decisions? Allow me to introduce you to the Monetary Policy Committee, or MPC for short. This committee is a 6-member panel that includes the RBI Governor, currently Shaktikanta Das, who chairs the committee. The MPC is not just a group of individuals, it's a mechanism that plays a pivotal role in shaping our nation's monetary policy and borrowing rates. Decisions about the repo rate, the benchmark interest rate at which the RBI lends to other banks, are made here. By influencing borrowing costs, the MPC has a significant impact on the financial health of businesses and consumers alike. So you see, the decisions made by the MPC are not just numbers on a page, they are the lifeblood of our economy. The MPC's decisions are crucial for businesses, consumers, and the overall economy. The MPC has been busy this year, and their most recent meeting was just on April 3rd. A 3-day deliberation that kicked off this month. The Monetary Policy Committee of the Reserve Bank of India, chaired by RBI Governor Shaktikanta Das, has been hard at work. This 6-member panel is the driving force behind the nation's monetary policy and borrowing rates, shaping the financial landscape for businesses, consumers, and the economy as a whole. The culmination of these recent deliberations is an eagerly awaited policy statement, set to be unveiled tomorrow on April 5th. This isn't just another policy announcement, but the first one for the current financial year. The significance of this event cannot be overstated. The decisions that emerge from this meeting will set the tone for the fiscal year ahead and will be essential in shaping interest rates. The committee's first bi-monthly review for this year will also take place during this meeting. Key decisions regarding interest rates will be made, impacting borrowing costs across the board. The benchmark interest rate, also known as the repo rate at which RBI lends to other banks, is one particular area of interest. Changes to this rate can significantly influence borrowing costs, making it a crucial point to watch. But that's not all. There's more to look forward to. After the meeting, RBI Governor Shaktikanta Das will hold a press conference at noon on April 5th to discuss the policy details. This will provide further insight into the committee's decisions and the rationale behind them. So, mark your calendars and set your alarms. The policy announcement is scheduled for 10 a.m. on April 5th. It's a moment that could redefine the financial year ahead. Stay tuned for the policy announcement scheduled for 10 a.m. on April 5th. So, what should we expect from this much-anticipated policy announcement? The main point of interest will be the decision on the repo rate. This is the benchmark interest rate at which the Reserve Bank of India lends to other banks. It's a key player in shaping borrowing costs, making it a vital tool for controlling the flow of money in the economy. When the repo rate is high, borrowing becomes more expensive, which can slow down investment and spending, cooling off an overheated economy. On the other hand, a low repo rate makes borrowing cheaper, spurring investment and consumption, potentially helping to jumpstart a sluggish economy. This decision doesn't just affect banks, it trickles down to every corner of the economy. It impacts businesses deciding whether to invest in new equipment, homeowners considering a mortgage, and consumers contemplating a loan for that new car. The repo rate can also influence inflation and the overall health of the economy, making it a significant factor in our everyday lives, even if we don't always see it. So, as the Monetary Policy Committee prepares to announce their decision, it's safe to say that all eyes will be on the repo rate decision. Before we wrap up, let's take a quick look back at the last MPC meeting. In February, the Monetary Policy Committee made a decision that had a significant impact on our economy. They chose to maintain the repo rate at 6.5%. This marked the 6th time in a row that they've kept this rate steady. The reason behind this decision? Inflationary pressures. The committee is doing its best to balance the need for economic growth with the need to keep inflation in check. Now, let's take a look at what's ahead. The MPC has a busy schedule for the rest of the financial year. The committee will convene again for their bi-monthly reviews on the following dates: June 5th to 7th, August 6th to 8th, October 7th to 9th, December 4th to 6th, and finally, February 5th to 7th in 2025. Mark your calendars for these upcoming MPC meetings and stay informed.